Hello guys, welcome to my YouTube channel. It's your boy Lord Smith FX again. In today's video I'll be taking you through different types of CRT and how you can trade them in the market, right? So we are starting with different types of CRT, a step-by-step approach on how you are going to trade this CRT in the financial market. But before I start, I want to first explain what a CRT is. Before, you need to understand the idea behind CRT candles, and also be mindful that CRT is a whole model on its own, right? But if you can use it to merge with other strategies, then they can give you a high win rate, right? So in this video I'm just going to show you what a CRT is and the different types of CRT that you will be seeing in the financial market. So if you are new to my YouTube channel, do well to subscribe, like, and hit the notification bell to stay updated. I'll be dropping videos like this. Support me, let's grow together, right? So let's start with what is a CRT. Simply, CRT means candle range theory, right? Candle range theory. Just like I said, it is a whole model or a full model on its own. So candle, we all know what candle means, right? A candle means, either in this market we know we have two types of candles, the bullish candles or the bearish candles. Now when we have a candle like this, we want to identify the high of the candle and the low of the candle. That is the first stage of the CRT, right? If we are able to identify the high and the low of the candle, we have something we call range. We have a daily range where we are talking about. So let me delete this. So now when we are able to identify this candle's highlight is the first candle, right? Whether being it bullish candle or a bearish candle, right? When we are able to identify the high and the low of it, we have something we call range. We have a range where market is going to be playing around. And now we want to see the second candle coming toward trade something like this, going above it and coming back to close inside the range, right? Closing back inside the range, and we have only a wick that was able to successfully go above this candle's high, right? Above this candle's high, above our first candle's high, which is this guy here. So when the second candle comes to do this, we expect the third candle to come and do what? Take out the low as your drawn liquidity. So CRT just simply means a trade candle analogy. Simply, the first candle, you mark the high of the first candle and the low of it, and you wait for the second candle to come and manipulate and take either the high. If it takes the high, we look to sell. If it takes the low, we look to buy, right? So it's just more like what? An AMD pattern. So let me give you this analogy. It's more like the first candle accumulates, right? Accumulates, and we all know what accumulation means. When something is stagnant, when it's not moving in a significant when it's not giving a significant move in the market, something just ranging, right? So this is the first candle, what the first candle will do, right? And the second candle will now come to manipulate, right? Taking out this high that we are talking about. So this is the first candle's high and this is the low. The second candle comes to manipulate and take out what? The high of it. And we all know what manipulation means. Manipulation means luring somebody to do something, right? Or deceiving people to do other thing, and you do the other way around, right? So the second candle, this is its purpose. It comes to what? Sweep out the first candle's high, which is the what? Manipulation. Then the third candle comes to what? Distribute. We see the third candle coming to distribute, right? So something like this. The first candle being our manipulation candle, the first candle being our manipulation candle, and the second candle coming to manipulate. Then the third candle will come to what? Distribute. The third candle comes to what? Distribute. The third candle comes to distribute. So the CRT basically means what? An AMD pattern. An AMD pattern, right? So usually the first candle accumulates, the second candle manipulates either to the upside or to the downside, right? And the third candle will distribute, right? Yeah. But mind you, we have different types of CRT. Just like I said, we are going to be treating CRT candles in this video, right? So let's get into the different types of CRT we can trade, right? So let's begin with the classic CRT, which is the 3-candle CRT. Now, what is a classic CRT? In this definition, they said the first candle engineers liquidity on both sides. When the second candle purges, then the second candle purges liquidity either of the range low or high, then price expands to the opposite liquidity. It is more like an AMD pattern, just like what we defined here. We said the first candle engineers liquidity and the second candle comes to purge liquidity either from the high or from the low, then the third candle distribute to take out the other drawn liquidity that wasn't met, right? It is more like an AMD pattern: accumulation, manipulation, and distribution, right? Yeah. So the second point here will be the story gets finished within the third candle. So you see, when we have our CRT candle like this, our first candle identifying the high and the low of it, which is very important. Now we want to see the second candle coming to take out the high or the low in any case of the market phase, right? You want to see market taking out the high or the low and mitigating your key level, right? So just like I said, we'll also be trading key level. In this video, I won't go much into the key level, but I'll just mention the different types of key level we have: the A-shaped key level, the V-shaped key level, which is this guy. So let me quickly draw that. So we have the A-shaped key level. Also, we have the V-shaped key level and the open close key level. The open close key level. Now these are the open close key level. The closing of this first candle in a bearish example, right? A closing of this first candle and the opening of it can be a key level for us where we can look to trade from, right? And this is our A-shape and our V-shape key levels too. So A-shape key level will be sponsoring sells, A-shape key level will be sponsoring sells, and V-shape key level will be sponsoring buys. And also we have another key level we can talk about, which is the fair value gap, right? So let me just draw that with this guy here. So the third candle, something like this. Then we have our wicks. We have our wicks. Now this is the fair value gap we are talking about, which can be a key level, right? Which can be a key level. The low of the first candles and the high of the third candles wick, right? So the low of this first candle wick and the high of this third candle wick, right? So that's the fair value gap. So we can also see a CRT forming inside this and we can look to trade, right? So these are the key levels I'll be talking about. The disrespected A-shaped key level, which, for example, if this guy was supposed to sponsor sells, right? We said this guy was supposed to sponsor sell, but if market comes to break it, right, we call it a disrespected A-shaped key level, which can be used to buy, which is a breaker block, right? So we have different types, but let's just go straight to the different types of CRT, right? So now we want to see our CRT forming at these key levels, right, which gives us a high probability CRT. We want to see the CRT forming at these key levels, giving us a high probability CRT, right? So when we see this, we want to wait for our second candle to come and purge the high, right, touching into our key level. Then we look to trade the third candle to take out the draw on liquidity, which is the CRT low. Now that's the first one. Let me look for an example here before we move to the next one. So for me not to make this video very long, I'll just be looking for one example each, right, so we can move faster. So this is an example of this classic CRT, which is a 3-candle CRT formation, right? So we can see here that, let me zoom it bigger. We can see very clearly that this is a fair value gap that we have here. You have a fair value gap here, this guy here. The market is able to take out this candle's high, right, touching into the fair value gap. Where is our low? the candle low, which is this guy. So we've been able to mark the high of this first candle and the low of it, and market took it out and touched into this our fair value gap, and we saw that the third candle was able to distribute to take out the low of it, right? Which is very simple. So when you get to your chart on the daily time frame or weekly or monthly, you first want to identify a range, right? The high of the first candle and the low. Then you look for the second candle to patch either the high or the low, right? Then you trade the third candle, right, in line with the direction, the higher time frame direction, right? Yeah, so let's move to the second one. Let's move to the second type of CRT that we have. Yeah, so the second type of CRT we have here, it's the two candle CRT, right? So the two candle CRT. So in this case, we say the main difference from the previous model was price expands and reach dull at the second candle, right? So I'm going to first mention, or I'm going to first read all these ones before we get back to the chart work, right? Then I'll give you an example of them in the chart. So the first point says the main difference from the previous model was price expands and reaches the dull at the second candle. The second point is after second candle purges liquidity from first candles, price gets delivered aggressively towards the draw on liquidity within the second candle instead of making a determined high or low. Now the third point here is this model is so aggressive, so it is mostly occurred in during news or high volatile market. So in this example, we said when we are able to identify our first candle's high and our the low of it, right, the second candle happens to just come and take out the low and distribute to the the first candle CRT low, right, without even waiting for a third candle to form. This usually happens during news or maybe when there is more volatility in the market. So you see the candle market taking out the first candle high, then we would have been waiting for a third candle to form, but the second candle does the work already, right? The second candle will do the work already. So let me look for example here. So let's go to GBP JPY. All right, I can see a very clear one here, which is this guy here. I can see a clear one here. So we have our A-shaped key level here, which is this guy, our A-shaped key level, our A-shaped key level. Now we've been able to identify our high, which is this candle, the high of this candle, and the low of it, right? And the low, which is this one. This is the low of the candle. And have we seen how when market just tap into our key level, taking out the high of this our candle range, it came immediately. The second candle was the candle that came to purge the liquidity of the first candle's low after taking the high. This is it here, right? After market touching into our A-shaped key level, remember I said we want to see this CRT happening in key levels, right? So after market tapped into this key level, it closed back into the range, taking out this first candle's high, right? Then now it was the same candle that was able to distribute to take the candle's low, right? So this is a first example. Let me see if I'll see another example so you might get it. But make sure you go to your chart and look for these patterns, right? After here, look for these patterns in your chart. Look for these patterns in your chart. Okay, this is another example here. We can see very clearly. We saw that market was reacting from this V-shaped key level, which is this guy here, taking out this candle's low as our CRT low. Then immediately it went to take out the CRT high with the same candle. The second candle was the candle that did the work. It moved aggressively to take out the CRT high after taking out the CRT low, then reacting from our V-shaped key level. Are we seeing? This is another example of it, right? Just here, which is the second candle CRT formation. Yeah, so let's get back to our third type of CRT. All right, so the third type of CRT here is what? The multiple candle CRT. So let me first define these guys here. This model is similar to the classic CRT, but the only difference is the third candle expansion takes multiple candles to reach the overall destination. Yes, and the second point here is after the second candle purges the liquidity from the range candle, the expansion takes more time and candles to distribute price towards the draw on liquidity, right? So this is just more like the first type of CRT, which is the classic CRT. Now when we have our range here, the high of this first candle and the low of this second candle, sorry, the first candle here, the market takes out the high, right, touching into our key level. Then the first type of CRT would have been expecting this candle to go to take out the what? The drawn liquidity, but this is a multiple type of CRT, so usually you see that it will take more candles for it to finish the destination or to reach the drawn liquidity here, right? It's not going to just be a third candle that is going straight to take out what? Your drawn liquidity, but it's going to be series of candles, right? Series of candles that are going to move downwardly, right? It can even be a bullish candle can even come here. So these are bearish candles, right? A bullish candle can even appear in the midst of market going down to take out this drawn liquidity, right? So this one, it takes more candles, right? Not just one candle to reach your drawn liquidity. It takes multiple candles before it will reach your drawn liquidity, right? And also this is something that I also discovered in the market. When you have a CRT like this, when you have a V-shaped key level, then we have our CRT. Usually we said we want to see market taking out the high and the low, right? Or the high or the low. Now we've seen market taking out this candles low here, touching into our V-shaped key level, right? Where would have been our target? This next guy would have been our target, which is this guy here. This guy here would have been our target because that's the CRT high. Market has taken the low and the high will be what? A target. Now, but you can look to trade to take out this candles high rather than just this candle, provided the candles that are trading downwards are what? The same candles. There should be what? Series of down close candles that the CRT happened, then we had it reacting from this our V-shaped key level or any key level we are talking about. You can look to take your target at the high here and not just here, right? You can look to take your target at the high here and not just here, provided they are all the same candles coming down. But let's assume if this candle was a what? If this candle was a bullish candle, if this candle was a bullish candle, right, then we would have been looking to target here, right? We would have been looking to target here and not greedy. But provided these candles all are what? Similar candles, then you can be looking to target what? The high of them. So let me look for an example here for you. This is an example of that multiple candle CRT, right? So something like this. We have market taking out this candles low. We identify our what? Our candles low, right? And the candles high. And our candles high, right? And market is reacting from this disrespected A-shaped key level. Remember I said we have different types of key levels. This is a what? An A-shaped key level that was supposed to sponsor sales, but market disrespected. Now it came and used it as what? Another key level again, and we had our CRT here. So normally we would have been targeting here, but in this case, because these are series of down close candles, coming before touching into our key level, then we can look to target here as our drawn liquidity, right? The high of it as our drawn liquidity, rather than what? Just the first candle high, right? So this is more like the what? The multiple CRT candles, right? So if this guy too was also a bearish candle, then would have been able to target the high of this what? Candle, provided they are all the same candles. So this guy, provided this all were what? The same bearish candle coming down. But in this case we have a bullish candle here, so it has intervened. So then we'll be using this guy as our drawn liquidity. Yes, so this is just like what? A multiple CRT candle. All right, so let's have the last one, which is the inside back CRT. So let's read the point before we get back to read, and also look for examples, then we can move on. All right, so the first point here is this model differs from all other variants, right? one of the most unique and high probability model used by CRT traders. And also the second point here is, after first candle forms a range, then second candle or upcoming candles must form inside the first candle range, which makes an inside bar. We all know what an inside bar is, right? So the third point here is, when price purges high or low of the range, then the expansion towards the opposite liquidity is said to be high probability. So this is it here. So when we have our key level areas and we are able to identify our A shape, all right, so this is it here. So when we are able to have our A shape key level here, right, which is supposed to sponsor sells, then we have our CRT candle high here and our low here. We've been able to identify our CRT high and low. The next thing is, we want to see the second candle failing to take out the high or the low, and maybe the third candle coming to take out the high of it, and this guy will form as what? An inside bar CRT candle, right? The second candle fails to take out the first candle's high. In this case, it takes out the first candle's high. It fails. You see it failing to take out, and also it will just be inside like this, right? Then the third candle will come and take out the high of it. Then we see a distribution to meet the drawn liquidity. So let's look for an example on this guy too. Then we can say that will be all for this video, because I don't want it to be very long. I would have find more examples here, but let's just do this. So on the daily time frame, all right, Alright, so on the daily time frame, this was a perfect example here. So we'll mark our high and our low. So this is our high, then this is our low, CRT low, our CRT low. Then now we can see that there is an inside bar candle here. So this is our first candle, the high and the low, and the second candle fails to take out the high, right? And the third candle comes to take out the high of that first candle. Then touching into this our fair value gap, we can see the market is reacting from this fair value gap. So this will be our targeted low, right? And this guy will be our inside bar, and this was the third candle that was able to manipulate into this fair value gap. Then you had a distribution taking out this drawn liquidity. So guys, that is it all for this video. I hope you were able to take one or two things from this video. Kindly do all to subscribe, like, and hit the notification bell, so the algorithm can be able to push this video to other people to also learn from it, right? So guys, stay blessed. I'll be dropping videos more like this here for you to learn from how I trade the CRT and MSNR, right? Stay blessed. Jesus loves you all. Remember to get closer to God. Bye.